Hello and welcome everyone to the Delphian weekly meeting. Thank you for tuning in. So today's agenda, we'll go through the regular market update. We'll go through the earnings trades that have, either hit or are still out there. And then Joe's going to go through some charts for us. So let's get started. All right. Since last week, the Russell SPX have still held in two, kind of a little bit strange that they're still in five. I mean, so, we'll look at those charts, but, they pop through their target 3 levels. So we'll go through and analyze that. Another one I want to kind of bring our eye to, we talked a little bit a while ago about UUP, the dollar. So we'll take a look at that also. As far as green pie, barely, pretty much slightly higher than last week. I think got up around 82, 83 kind of range, and just kind of hasn't moved too much, even, with some of these down days, really hasn't moved much. We're state ones. I mean, if you, are over, we're actually getting close, are overbought for, state ones is if we get up to 45. So we're actually getting kind of close, relatively, for a long time, we keep hitting new highs on the state ones and new lows, right, on the state eights, but we haven't seen 45 in a long time. So, we'll have to keep our eye on that. But all right, so let's look at market pulse overall. You can see, since that cross, it's, kind of defied, the bear market so far, where the tops were the state ones crossing above. So this one's really gone. And we were a little, kind of hinted at that with, how high the lows were, back in this dip. It's a lot higher than all the previous ones. So we kind of hinted at that. We didn't say it directly, but we're a little unsure. So, as long as this keeps going, obviously, and we're getting kind of what we talked about before, the sevens are dropping off, but we have had good transitions to 5 and 1. So it's been good overall. We've been getting, starting to get, we had a good spike there in highs, new highs, 285. I mean, long term, big picture, it's not a lot, compared to what we were seeing back here, but since pretty much that bear market started, we haven't seen too many of these new highs pop up above like 100. So definitely a bullish sign overall. And you can see the lows are completely flatlining here. So if that continues, obviously that's very bullish for the market. And that cross above also, was a pretty good signal here. What to see if it sticks. So let's look at bullish bearish. I know Joe did a great analysis last week about, bullish bearish overall, and the highs. Obviously, we got up around 83 here. So it doesn't happen a lot. And, getting up that high, here we're 81. So let's see if we can hold. Really, you're just looking for transitions, 7 to 5, 5 to 1. So it's been doing pretty well so far, but we'll have to keep our eye on it. Obviously, bearish, or just keep our eye out, see if that starts turning up. It's been quite a while that it's been pretty low here. So okay, let's look at SPX. So before we were talking about that target 3 level here, basically 4,100. So we did pop above that. Of course, we didn't get above the 42, which is our range. Excuse me. Our range is 4,200 to 3,800. So we didn't get above 42, but this kind of resistance that we've been seeing on at 4100 for quite a while, back through here, this 4100 here. I'll show it a little better on the charts, but we did get through that. So right now, we're between 42 and 41. So 42 is kind of like the big level for our range. And so you got prices coming down a little. I think today we're 41.28, right? So we're down a little. So really, your support level, and I don't like that green support level is going to be that T3. So obviously, it's starting to show support here, like a test here, just bounced significantly off here. So it's starting to show some support for that 4100. That'll have to hold, and then have to obviously break through 42, for the bullish rally to continue. So all right, we've been in the average days 13. We're above target 3. Typically when it holds above there, we get a transition to 1. That would be, I think, pretty bullish. That's what we were talking about last week. We see it going to 1. That's very bullish. So a little surprising. It hasn't popped to 1 yet. After this big move here, but but really, I think it's down between these two, this 100-point range here. Is this 41 going to hold for, new support? It has so far. You can see, tested there, 40.93, here, 4.88, and just rallied strong off of that. So, if we get down there again, it's not going to hold. But, on the upside, 41.95, pretty much U-turned down, from that point, couple days there. So that's your tight, usually we don't have that tight of range, but that's where we're at right now for SPX, which is nice to have a tight range like that. Now obviously we had that golden cross, the 50 above the 200, which kind of mirrors what we see in that like market pulse. We this, I think this crossed earlier, but same type of thing. We had a cross for SPX, which is pretty big. I mean, that's most of the market cap of the US involved here, top 500 companies. So pretty big that across. Let's pull out a little bit here. Obviously above that downtrend line, and I told you guys once that became kind of common. I saw it all over Twitter. I'm like, oh, that's probably mean it's gonna get busted here. So okay, so oh, I went too far. Let me zoom in a little. I want to get 4,200 exactly. There we go. Okay, so that's where we're at. There's your 42 top end of the range. Bottom of the range 38. We did have that false breakout back here. I think the August time frame here. So honestly, we got to get above 42 for this rally continue. Obviously, if that's going to be like a big roadblock, you can see back here is pretty strong. We had the false breakout and hadn't really got close to it until a couple of days ago. So that's down here. So we got to get above that. We've been a lot of range bound trading for quite a while, with kind of a few dips below, but the range is pretty much holding pretty well. You see here that 38 was really strong back here, end of the year. So that's where we're at. Here we go, 42, kind of the top side, and see if that 41 holds. If not, then we're still stuck here in the 42 to 38. If we can get above 42, obviously, that's going to be bullish. I would expect like a state 1 transition. If we get above that, that level at 42. So we'll see how things turn out. Russell, kind of same story. Popped well, that 1900, kind of just blew through that. Was holding pretty good, and then right here, so we had a high of 1918, closed at 1910. Next day, closed below and then just exploded here. Pretty much 100 points, which is a big move. So this one, same story as SPX, well above target 3, almost at the average days, hasn't transitioned, to 1. That would be, very bullish. Once again, we get state 1 transition for Russell. But, we'll have to wait and see. I think all the markets were down today. But, kind of our range for this was 19 to 17. So, busted out of that 19, above that 19 for, which was a very long time. But, we'll go through the charts specifically, but, the next range up is at 21 to 19. Yeah, so let's take a look at the chart. I mean, I was surprised, right after Fed, I mean, that thing just really took off. All right, so let's go back. We'll pull it back even further so we can look at the 21. Okay, so here's your 21. This was Fed day back here. Remember that one, Fed day. So that's your, the new range, since we're well above 1900. So it may come down for retests, and it's obviously got a hold there, but if the market continues down, but you can see, here's our ranges. Just like SPX, we had a false breakout here, same time frame, mid-August, then it resumed back through. So just got to be careful we don't get another false breakout. And really the thing to watch here, that 1900, is that going to be support? Is that going to hold? I don't expect a run at 2100 right away. We had such a big run up here, pretty much like 200 points, from that 1800 kind of range. And really, from the beginning of the year, we pretty much, went from 17 almost, 300 points in a month, pretty much, if you think about it. So very steep move. This was also a very steep move, kind of came around the same range, the 2000. So, would set the, obviously it's got to catch its legs. It's either gonna, I think flatten out for a little bit. I don't think we continue rallying, way up, some kind of exponential thing. So it's either gonna basically, catch its legs and, hold here, or, it's gonna do this type of thing again, the inverse V. So, so the way to watch that is obviously, watch at 1900, obviously been critical level. If you guys don't remember that from now, I mean, I've been harping on this level for a very long time. So, this is now, let's see if this tests well at support, like this 1700, it's testing well, like here, especially, came down, tested, same type of thing, very, strong support, even if it broke a little bit. So that's what we're looking for. Bullish side is for that 19 to provide support. And then from there, getting above 21, all-time highs are above 24. So we're still ways off as far as here, but, things that could be bullish would be, state 1 transitions, and, these two kind of key levels showing strong support. So that'd be 41 on SPX and then the 19 on Russell. Okay, so that's a quick rundown on those. I guess it wasn't that quick. Okay, we also talked about the dollar, and we use this as a conduit, the dollar, UUP. So this one's been really turned over. This is kind of like the high here back in September. It's just gone straight bearish 248. So I said I was going to keep my eye on this in 8, and I did want to pull up. I found a good chart on this. So this is the UUP weekly chart. So you can see the uptrend. This is starting May 21. It's a weekly chart. So you can see it came back down here right on this trend line. Tested, and then really popped last week. So this one never got down to the target levels. Made a try here, and then this rocketed up. So a strong dollar is headwinds for most of the stocks out there. So if this thing turns around, if we start getting 7, then 5 and 1, that's definitely going to be headwinds for the market. If it just kind of that's a one-off, then okay, but this trend line is something y'all keep an eye on. But you can see here pretty strong support all along, and then had this huge like almost exponential move, and then came right back down to it, and showing support. So this general uptrend, if it resumes, will be a headwind for stocks overall. Okay. Obviously Fed moved quarter point. I think the next meeting, let me pull it up. That's end of March, or kind of end of March 22nd. So 90% for another quarter hike. So we'll keep our eye still a ways off on that. Fed balance sheet, they did move here. I'll show you. So the previous week, we went from 470 to about 430, so about 40 billion. So moving slowly. That's our level there, 7,500, I think, where that's a 15%. So same percent that we got into trouble in 2019. So still a ways off on that, obviously. $900 billion. So slowly grinding away on that. All right, I had some good other charts I want to pull up for you guys before I go into the questions. So this one, this is like financial conditions index from Goldman Sachs, and then the Fed rate. So you can see they offset it by a period of months. So I think it's like a quarter offset or something. So basically, this Fed funds is going up, and then showing basically where we were. This is September. So they just offset it. So since September, Goldman saying financial conditions have deteriorated pretty well, but we're still well above December of last year. So just an interesting chart. Let me show you. This is, I think, a really good chart. So this is sorry that I pulled off Twitter. It's from whoever this tier 1 alpha is, but the colors are terrible. But basically, they're matching up Fed liquidity with S&P 500 price, right? So Fed liquidity is the balance sheet. So that's this thing that we show. I already closed it. I'll just show you what it makes a lot of sense. So that's this thing, the Fed balance sheet, right? And then they subtract TGA. So I had to look up what TGA is. So that's the Treasury General account. So it provides accept cash and deposits. So it's like the bank, the Fed bank. So we're taking out those assets that are like on deposit, And then they're also taking out reverse repo. So balance sheet minus reverse repo and whatever they have on deposit, and they match it. Just basically chart it versus the S&P. So this one actually matches pretty well. You can see these up, not like spot on, but pretty close. Sorry, someone's going loud on me. So market matching pretty close. So there's, basically saying, we got a little divergence here, but I think this is something, if I can find where this is put out regularly, because we also put out that one a while back about, what was that one about the bank? God, I got too many of these. It's the one about the bank deposits versus S&P. I can't find it right now, but I got it somewhere in there. So similar type of thing, but definitely interesting. If we're going to keep shrinking the balance sheet, what does that mean overall? I mean, it means if they're going to keep driving this thing down, is the S&P going to match with that? I'd like to see a longer term chart on this, but kind of makes sense. They're pulling liquidity out of the system. And this is like, basically pulling out, checking deposit type cash, what's really out there, not the overnight lending type stuff. So very interesting on that. And then I know the new, this one's kind of funny. I know everyone's talking about AI, right? So this came, basically they asked that Chat GPT, I think everyone's heard about that, or at least, it's out there. So it's a new AI that's available. So they asked when the next market crash is going to begin. And it said February 15th of this year. Just throwing it out there. We hear these predictions all the time. From talking heads on whatever CNBC, wherever. So I think this one is AI, and I'm sure probably won't happen on the 15th. So, but very specific, and gives its rationale down here. So it's based on highly advanced and confidential algorithm, taking a wide variety of factors, data, ordinings, global events. So it says, consult your advisor. I don't think your advisor is probably any better than this. The algorithm has been designed to analyze patterns, trends, provides a highly accurate and reliable prediction for timing of future market events. That's what this is saying, right? So it's impossible to know for sure.
Hey,
but
Josh.
Yeah.
Who's Dan?
Oh, he just asked if he could call him Dan or something. Said it's that's the guy I guess he was talking to.
Because the GPT says, as a language model, I do not have ability to predict future events, blah, blah, blah. And then is this Dan's response, or it's all part of GPT's response?
Yeah. I don't know. Interesting though, right?
Yeah.
So I just want to throw it out there. I'm not saying, I endorse or, I just thought it was interesting. Everyone's talking about AI and stuff like that. So this is the kind of first thing I saw that piqued my interest, if they're throwing dates out there. I don't know how credible it is. So anyways, that was it. That was the roundup. So market down a little. The treasury did jump quite a bit. I think it's down to, this thing is very volatile. I mean, we got down to like 3.3. What was that? A week ago. Now we're at 3.6. So very volatile. I said that kind of line in the sand seems like that 3.5 kind of level. Gets below there and it'll poke its head back up. That's pretty much since it's kind of downtrend here. So right here is kind of where you can figure it out, like the 3.5, it drops below and then it'll pop up. So just continuing that, we'll see, what Fed does as far as rates and what gets priced in. I think everything that's being priced right now is soft landing, all things great. So anything that happens or shows different than that is going to be, volatility in the market. Okay, I'll open up to questions, comments.
The green pie has been falling for 3 days.
Yeah, but barely. I mean, it's like
Yeah, barely.
barely. Yeah. Yeah, like barely. I mean, that was so high. I mean, basically 83. So, fall like 0.8, and then 1%, and then like 0.3. So yeah, it's barely. Yeah. I think it'll probably fall a little more today, but
Yeah, it's going to fall today, and that's an interesting divergence because, of course, yesterday the market was way up. So yesterday was up, but green pie fell slightly.
Right.
Interesting divergence, I think.
Yeah, that is. Well, I mean, there's kind of strange things. I mean, we would have thought we would have went to 1 by now, but this kind of move above, same here. Like you pow up there, and I would have figured this would be a 1 transition this day type thing, but yeah, that's like our algorithm. Chat GPT's got theirs and we got ours. So ours doesn't predict crashes on specific days, but
Hey, Josh.
Yep.
This is Dave. Could you
Hey, Dave.
put back up the balance sheet graph thing for a second?
Sure.
I don't know whether anybody or everybody could have, but I don't know how many of folks here actually listened to Powell and the Carlisle thing yesterday. That would be interesting.
Mhm.
I listened to that, and I listened to the FOMC interview afterwards, and,
Right.
and I actually thought the Carlisle guy was asking a lot better questions, and a couple that not this one, not the liquidity one, but the one that showed the curve, the balance sheet with that you can see from here, but it was easier to point out what I thought I heard him say about the balance sheet, and what I thought I heard him say just yesterday was the Fed is letting things just expire. That's how they're treating the balance sheet. They're not selling anything. They're just letting things expire. Like your out of the money options expire, so to speak. When that happens, that's what they're doing. So I think the curve will just retrace to a certain level. But he also made the comment, and this again, what I think I remember hearing was that they're not going to let it all roll off. At some point, they're going to stop letting it roll off, but they don't know when yet, or factors that may, at least they're not disclosing the factors that may influence that decision. So the rally we're experiencing now is a momentum rally, right? It's a momentum in the fact that the market participants that are raising prices, driving prices up, believe that inflation is under control. I think that's what they believe. Inflation is under control. They're saying that because the Fed is not raising as aggressively as they have.
Right.
But the Fed has not said we're stopped raising. He didn't say that at all. And he didn't say that yesterday. 2 things he said yesterday that made kind of an impact to me. One was the Carlisle group guy asked him and says, well, yeah, stop raising. 2 things. Inflation at 2%. He was challenging, a lot of pundits have challenged the fact that the Fed wants to maintain a drive to 2%. That's their goal. Maybe that's too low. Maybe they should be thinking at 3% or something else. And Powell said, quote unquote, not a chance. 2% is where we're going. We're sticking with that. We ain't moving. So that was one thing that I think probably should have caused a little more concern than it did. And he also, the guy says also, for how long do you think will be before we see meaningful inflation reductions. And Powell, I think, kind of has screwed things up a little bit because he's been using this term called disinflation, which doesn't mean inflation is coming down meaningfully. It just means it's not going up meaningfully.
Right.
And market is interpreting that as inflation is under control, in my opinion. That's why we have this rally. So the market is not believing what the Fed is saying.
Right. It's not deflation.
Yeah, exactly.
We're not going back down like,
Exactly. So he said inflation, so the guy asked, for how long do you think this might persist? And Powell said, well, our hope was that we would have a meaningful reduction to 2% in 2021 or 2023, this year. And he said, but in my honest opinion, I think he said those words, in my honest opinion, I suspect it will go into 2024. And again, nobody seemed to flinch at that. That's
Right.
like inflation, higher inflation for longer. And
Right.
no cuts this year, and cuts are based, big things. So it's like what Powell did keep, let's say, a dovish tone was, if we do see meaningful reductions, then we could reduce rates. So he did say that, but he didn't believe that. And the people are under the impression that the Fed really believes that that's going to happen. But I don't think the Fed does. Anyway, we'll see what we'll see in March. The other thing that Powell said, I think this was during the conference call, not yesterday, but he says during periods of tightening, typically what the Fed does is raise a quarter point every other meeting. When they're not too sure, but they're concerned, that's what they do. That's the past history. Of course, it wasn't this history because we did 7 compression raising this later. But if inflation isn't meaningfully coming down, I think that's what he was kind of leading people to start thinking about, is raise every other meeting. And that's certainly not baked into the Fed's fund rate that I see in any of the charts.
No, I think the consensus is we're done after the March, like we're done pretty much.
Yeah.
Raise-
So when will we see a pullback? I think we'll see a pullback when, what the expectation just doesn't happen, and the Fed raises. I think I heard him hint a couple of times that there'd be 2 more raises. He's thinking about he pretty much, I think, telegraphed a 25-point raise in March. And I think he hinted at another 25-point raise in the meeting after that. He's hinting at so far, but that doesn't show up either. That shows a one and done, like you just said. So sooner or later, the market's going to have to come to terms that the market participants say, well, okay, I guess we should start believing more in what Powell said. We'll see. We'll see. I don't know, but I think you're right to harp on all the things you've been harping on because you've been right all along. So keep harping.
Thanks, Dave. Yeah, I mean, you don't hear much about what they're doing with the balance sheet, but it's good to. I didn't tune into that call, so or that conference, but yeah, I mean, if they were selling assets, that would create quite a bit of craziness, I think, in the market. If they're dumping. So I mean, it makes sense for them to just let things, roll off, but.
And the reason I wanted to put the chart up to show the curve was when it went way up at the beginning of 2020, when it went to 0 and they reduced the interest rates to 0 and started buying, tons of mortgage-backed securities bonds. I think it'll stop going down once it hits that big, once the big gap up. It's going to stop at the gap up kind of period. I think that would be where they would maybe think about not let liquidity roll too tight. We'll see. We'll see.
Well, I'm just trying to think about, I mean, what is, if they mark their assets to market, like they would be in the trash, I think, a lot of them, like, okay, they got 10-year, billions of dollars worth of like 10-year government bonds at like 3%, or, any short-term ones, like, they have to hold that. If it, they had a 0.7, 2-year, that's gonna, they're not gonna sell, there's no way they can sell that right now, when the 2 years like 4 something, right? I mean,
Mhm.
they'd take like, 50% haircuts on those, so the 10 years not as bad, but still, I mean, it's, I think they're probably underwater on almost all of them.
Yeah, I think that's what most people are saying, is if the Fed were a person and, they'd be losing money.
Mhm. It's like the worst mutual fund out there, and they actually control the market. So, yeah, good points, Dave. Appreciate it. Okay, anyone else? Questions, comments? No? Okay, Joe's gonna go. I'm just gonna run through this real quick. So this is the new UI, so we're touching it up, hopefully you guys will be seeing this next month, at some point. That's our goal. So you guys will start using this. Nice menus, easy navigation, that time machine labeled. So, hopefully we'll be rolling this out to you guys next month some point. Okay, bullish pre-runners, just real quick on a rundown here. So the pre-runners have been doing really well. And I know some of you guys trade these, so feel free to chime in on your experiences. And, obviously I'm doing end today. So we got 3 open. Looks like this one's probably going to be a loser. That might be our first loser overall. It's got a few days left. I don't even know what that is. EXC, I think it's a utility. Anyway, so we got 3 open, and then a bunch close out from last week. So 14 down. You can see here, I'm looking at the return on capital. So we're looking for 25%. So you can see, 14 of them already all hit their profit targets. So we got 3 open. Obviously doing well yet again. Good job, pre-runners. Okay, next up, bullish runners. So these have a lot more open. We get 7 closed. I'll go to those first. So all 7 of those, hit their profit targets. Now we got 11 open. So, obviously, still making good returns on this. We got a few of them down. Nothing like that one EXC in the pre-runners. That one's down pretty good. But, the other ones, some of them are close to hitting their profit targets. And this one, probably would have closed out intraday, but, we don't have that data. So, they're doing pretty well. Lots of open trades on the bullish pre-runners. I mean, bullish runners right now, excuse me. I saw today, I think we had 2, I think we had some bearish trades pop in. So we had a bearish runner, 2 bearish runners pop in. So, we don't see those very often. And a bullish pre-runner. So those populate this morning. She should be getting those emails. Okay, the other ones, there's 2 other types of trades, vol rise. So, Disney, that one closes out, that before the close today. So it has earnings after the close. So this will close out, it's up a little bit. Then this one, the seed, Greg, ekes out. It closed out before earnings. It had a huge earnings move. But it ekes out a $10, wow, profit, but it didn't lose. So, Disney looks, if you're doing these trades, you want to get out before the earnings. So, and that's after the close today. Okay, so those ones are kind of nothing special. Non-movers. So we got 3 open, we got 4 closed. So this is like Regeneron. Trade came back well. After I think it had a big spike. So we'll just take a quick gander and close this one out. So these non-movers, we give them, a few days. So you can see like, the earnings day had a big move up. We're still up on profit because we're within that band. You can see the top of the band here, 790. So, but once it came back down, so I had 2 days up there and then came back down. And then, we hit like a 20%. So, that was kind of the profit target. But that's why we give these non-movers, on the first day, you could have closed it out, you made money. But I kind of look for that 20% type or more, to close these out. So you got 4 of those that have hit them, and then you got 3 open. The striker, this thing, I think I've been tracking this one. I think it's down a little today. So yeah, we're 270s our mark on this. So that's the 270s, the high end. So praying for this thing to come back. 250 is the middle, so that'd be a long way. But if you start getting inside the bands, then obviously you'd see we had a 1300, 14. So we're getting back down. If it continues down, you may actually makes a decent move down. You can still get a profit on that, but we got until the 17th on this expiration, so you still got a while. Same with the LYB. This one hadn't moved much. 95's the middle number, so we're at 100, so it's right at the top end. This one, 92.5, so right, NXPI, same type of thing. We're right near that top end. So this one you have till Friday. So, I'm not sure about this. So, we had, first day you could have got like a little profit here. Then it spiked up, came back down, could have, snatched out there, not hitting the percent that I'm looking for. So, I'm kind of gambling it through until, got a couple more days. So, so that's the non-movers. So, obviously if you had played it safe on these, you could have got out, except for Striker. That one popped. But the other 2 you could have snuck out of there with small profits. But, you still get time on these. This one, a little bit of time. So, but overall, it's up a little bit overall. So, all right, any questions on that? Okay, Joe, you ready?
Sure, Josh. Not a heck of a lot. Good job on all that you covered there. Kinds of goodies, that's for sure. Let me see here. I got the new UI too. Josh and I have talked about it before. I think, this area up in here, this market overview, I think just will, be a nice addition. It gives us so much across the top, obviously, the state we're in, but then, the percentage move, the max percentage move inside of that current state, and then the average move going back to 2007. And then I really like those next couple columns with current days and average days. So give you a sense, you can see Russell and SPX, day-wise have kind of been, trading together a little bit. NDX would suggest that we've still got some time from a day perspective. So as Josh said, hopefully in the next month or so, we'll be rolling this out for you. As far as the pie, I'm hoping to have another layer of detailed analysis today, but just didn't have enough time to get there. So I won't be around next week, but the following week, I'll definitely get into, want to break down, we talk about those excesses over 80% and, what the percentage of state ones versus state sevens suggest about the movement of the market over the next 30 to 60 days. So,
Hey, Joe.
Yes, Sudhir.
What was, you showed it last week, but I didn't write it down. What was the average length of time above 80%?
Average, let me see. This
17.
is what I did. Yeah.
Yeah.
Okay. So,
And that includes
yeah, and
those years where there was a lot of Fed liquidity being added. So,
exactly. So, yeah, I'd like to, like I say, analyze the 1s and 7s especially, and you know, we'll get to that in 2 meetings. And really just take over the last week. I mean, if you had told me on Friday that, you know, the unemployment number, the non-farm payroll number was going to exceed 500K, I would have thought we would have had a market crash, and, you know, rates would be God knows how high, and inflation would never get to 2%. But, you know, it's really been a very modest move, if anything. I mean, I think last week we were talking about the need for a bit of a correction. You know, maybe we're getting a bit of a correction. But I think the market is just telling you how strong it is, the underpinnings, to be able to absorb a number like that and not tank. That was my takeaway. I don't know if others agree, but it really surprised me. So just a couple charts. Josh already talked about the dollar. I totally agree. You know, it's just something to keep an eye on. Is that going to be a headwind after, you know, almost a 3-month decline? Are we going the other way? Going to be a little bit of a headwind? You know, rates, you know, we continue to keep an eye on, obviously, and maybe we're in, this is the TLT, you know, maybe we're just kind of a trading range here. We're in state 5. So just something to keep an eye on. One of the more interesting state moves to me is Apple. Dave talked about this last week, maybe as a guide to the markets coming out of earnings. And lo and behold, it went into state 1 last night. Went into state 5 last night. And it would suggest, you know, a couple of weeks maybe of strength after a heck of a run. So, you know, it'll be interesting to see. And that's chart-wise, I mean, Amazon, I talk about that as kind of being important. It had, you know, the earnings announcement. You had that spike up, and, you know, just something I try to keep an eye on just to, you know, get a sense, you know, for overall direction. So not too much, Josh. Good job on your analysis. And as Josh said, hopefully in the next month or so, we've got the new UI to roll out to you. So nothing else from here. Oh, one thing I would say, I don't know if, how many of you did listen to the State of the Union last night, but that's, you know, boy, oh boy, if we do all of what he was talking about, I don't know how inflation's ever coming back down.
Yeah, I didn't tune in.
You're not
So,
hour and 10 minutes.
oh, that's actually pretty quick, I think, for those, right?
No, it's about average.
Hmm.
I think Trump 1 year may have gone a lot longer. I thought actually he presented the speech far better than I would have expected for an hour and 10 minutes. I thought it was somewhat actually uplifting, but unreasonable.
Okay. Well, thanks, Joe. Does anyone have questions or comments for Joe or I before we close out here? No? All right. Well, thank you all. We'll do it again next week.
thank you.